Hello traders! In this lesson we will talk about the basic Fibonacci trading rules. You can also write them down in your notes if you make them, but it's not necessary because we have made an additional material to this lesson in the PDF format. There you will find all the rules that are mentioned here along with illustrations. If you're a beginner, please download it to your computer and browse a bit so that you understand them better. Okay, the first rule. Fibonacci is always used in a trendy environment. What does it mean? This means that we will only use Fibonacci in a rising on a downward trend, but we will not use it in the sideways trend because it will not help us much. So when we open the platform and when we notice the movement of the currency pair in waves with higher tops and higher bottoms, as we have shown here, we can apply the Fibonacci. When the movements does not have any specific rules, when the highs and the lows of the price are scattered along the chart, as in this example, then we will skip that currency pair and look for something with a clear trend. Okay, the second rule. In order to use Fibonacci, we do not just need a trend, but a retrace as well. What does a retrace mean? Retrace is the price movement which is opposite to the main trend. On this example, we can see a wonderful thing. The first movement is the initial trend, while this movement represents the retrace that we want to predict. So it is considered just a small opposite trend that should be stopped and the price will continue in the direction of the main trend. Okay, the third rule. In the rising trend, Fibonacci retracement always starts from left to right, from a significant bottom to the highest top in the observed trend. Each levels of the Fibonacci retracement that is below the current price represents the levels of support from which we expect the price will continue to rise. The fourth rule. In a downward trend, the Fibonacci retracement always starts from left to right, from a significant top to the lowest important bottom. Each level of the Fibonacci retracement that is above the current price represents the potential resistance from which we expect the price to decline and continue in the downward direction. The fifth rule. Fibonacci extensions are used in the same wave as the Fibonacci retracement, but in a situation where the opposite wave exceeds the bottom of the initial wave. That would be the rule, but many traders, as do I, often use Fibonacci extensions in a different way. I will explain this other way to you in the Fibonacci extension levels lesson. The sixth rule. Fibonacci retracement levels are mostly used as levels at which traders open their trades, while Fibonacci extension levels are usually used as potential profit targets, but in a situation where extensions are measured in a different way. I will also explain this in the Fibonacci extension levels lesson. The seventh rule. You can use this tool in all time frames and of course on all financial instruments and even on very volatile ones such as cryptocurrencies. I'll show you this on the Bitcoin case. This is the graphic of the Bitcoin movement. We will only look at these most important swings. This first great wave was the initial trend. The second wave was a retracement which we wanted to predict. When we run the Fibonacci, the retracement levels will appear. The first major decline in Bitcoin's value was on 0.618 retracement. That is where the decline stopped and the price started in the direction of the initial trend. Now, let's just zoom in the graphic and we'll just watch this first big drop. If you take it as the initial trend, okay, this is just illustration, this wave would now be a retrace. So let's see where its growth stopped. From the beginning of the wave to the lowest bottom, we will stretch the Fibonacci and we'll see that the price again stopped precisely at the level of 0.618, the most important level of the Fibonacci retracement. Let's move on. If we take this wave now as the initial one and run the Fibonacci, the next retracement occurred again at the level of 0.618. So as we can see, even on this extremely volatile cryptocurrency market, Fibonacci can be useful. Okay, check out the rules that we received with this lesson. In the next lesson, we will talk about the Fibonacci retracement levels. See you!